Well, I think, and almost sort of fortuitously, what we did see a lot of recently, or have seen a lot of recently, is trying to effectively fade that weakness in the Japanese yen. So as you can see at the bottom of the chart there, you've got the USD JPY, so the dollar yen, and the Aussie yen as well. And you've got short positions in that really quiet stretch, just really on the basis that the yen has weakened so much considerably. Of course, that's been tied back to that steepening of global bond yields and the fact that the yen as a funding currency and as a Japan as an economy that's unlikely, as we saw today in the BOJ at the BOJ meeting, very unlikely to change policy meaningfully compared to the rest of the world. Really weakened quite considerably lately, and of course we've had an element of risk appetite flowing through there as well. On the flip side of the equation, you can see at the top of that chart there, the USD CAD, long positions really building there as well, because we've seen this really incredible weakness coming through the dollar versus the loonie. Of course, that's been on the basis of that rising oil prices, and as we saw last night as well in that most recent leg lower for the USD CAD. A really hawkish Bank of Canada, which has removed now completely its quantitative easing program and has flagged interest rate hikes as soon as the middle of next year or thereabouts. So, what we've really seen, again, as is typical, is traders trying to either basically try to counter trend by going long the yen because of how extreme the sell-off it's gotten in the Japanese yen, and has also attempted to basically fade the rally in the loonie generally. And if you look at the price action today, it's actually normally it's a bit of a contrarian indicator, but it's actually paying off reasonably well today because some of those moves seem to be playing out a little bit.